Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. The Lal Street is set to kickstart earning heavy week on somewhat flattish to positive note out there. Nifty futures on the SGX indicate a negative start, somewhat mild start coming in for Indian equities. US stocks, they rose actually on Thursday to end a holiday shortened trading week. Asian shares at this point of time, they've inched higher after the US job data underscored tight labor market. FIIs, they've bought shares worth around 475 odd crores and DIIs, they've sold shares worth around 997 odd crore. But with that, let us get going and discuss some stocks and strategies today with Prashant Sawant, co-founder at Catalyst Wealth. Good morning there, Prashant.
Yeah, morning.
All right, the market is closed higher for the fifth consecutive session on April 6th, especially after the RBI surprise move. This week is completely marked by the earnings season. You have all the big IT guys coming up and reporting their numbers. What do you make out of it and what should be the strategy for Nifty in this week?
So, one major thing which we need to focus upon is the fact that the India Volatility Index, the India VIX, it closed at its lowest ever in the past one and a half year. So that shows that we might enter a range-bound market and it might be a 50, 60, 100 point move within a day or so. And if we talk about the major levels, so I would like to give the levels in April futures because if you see, normally the trading happens in the indices only in futures. So from a positional perspective, we closed somewhere around 17,650. And on the upside, the major resistance happens to be 17,780 to 17,800 zone, which is around 130, 140 points from where we closed on Friday. And the major support, according to me, a make or break level for Nifty on the downside would be 17,525. So that would be around another 100, 120 points below the closing level. Now, that's why I am more of a view that we might be in a range-bound market unless and until we give a clear breakout or a breakdown above 17,800 or below 17,500. So till then, we might oscillate in between this zone. And similarly, if you look at Bank Nifty, on the future side, we closed near 41,200 approximately. So 41,500 to 41,600, that is around 300 points from here, happens to be a major resistance. And on the downside, a positional support is around 40,800, 40,900. So I think as long as that is intact, you can hold on to the longs. But a sign of caution would be, if we look at the daily chart from a technical perspective, on both the indices, there was a downward sloping channel. And we are now at the upper end of the channel as well as at a major gap resistance. So my suggestion would be to trail your longs in case you're holding them or else keep a tight stop loss, which should be around 50 to 60 points in Nifty and not more than 100, 150 points on Bank Nifty. If it triggers, my suggestion would be to exit the longs because we are at a major resistance and wait and watch for the next move.
All right. Okay. So that's the word coming in on both Nifty and Bank Nifty. But Prashant, three tradable, profitable trading ideas that you have for our viewers this morning.
Yeah. So, Nickey, I have one sector which was underperforming, and I feel that it has formed a base, but it would not be a strong positional buy. It would be more of a pullback trade. Now, what's the difference between a pullback and a strong buy? Is when you're buying strong breakouts, you can go with aggressive quantities. When it's a pullback, you need to plan the quantity accordingly. So metal sector looks decent and my first pick would be Hindalco. I would keep the stop loss at 395 on spot basis. My target would be around 424, 425 zone. And I'm looking at it as a pullback trade. A strong breakout candidate would be Anant Raj. It has shown a strong move supported by volumes. So I would keep a stop loss at 120 and it goes straight in my portfolio as a positional pick. For targets around 155 to 165, looks very strong in this market. And my last pick would be a stock which saw a strong downward move on Wednesday, but it had a decent support taken on the Thursday session. That would be Ashok Leyland. So here I would keep a stop loss around 131 and my target would be around 145. So these would be my three picks. And if you ask me the strongest among them, it would be Anand Raj for sure.
All right, so Anant Raj, Hindalco and Ashok Leland are the three bets that Prashant has suggested this morning. So do keep a close eye out on that one. But we'll address top movers of the day because there are a bunch of names that we want to talk about, which includes the likes of something like Godrej Properties, city gas distribution companies. They are expected to remain in spotlight for the day. And of course, auto companies like Maruti Suzuki and Tata Motors, amongst others. But let's address first the report which is coming on Godrej Properties by Motilal Oswal, where Motilal Oswal has upgraded the counter to buy rating and a target price of around 1,575 rupees per share, which is way higher than what we're looking at right now. 1,100 levels is what the stock is currently trading at. So, Motilal Oswal in January initiated a neutral rating for Godrej Property, and since then the stock has actually corrected 40%. So definitely there is also some amount of reasonable valuations now that the stock has been looking at, because of which there is an upgrade which has come in, apart from the few strong fundamentals that the brokerage has highlighted, which includes the light of company is now believed to be on the track to achieve its free sales target of 200 billion rupees by FY26. On back of that, on back of the performance coming on that, FY24 and FY25, beg your pardon, estimates of free sales have been revised higher by 23 and 44% respectively as they incorporate recent project addition. They've also revised the FY25 revenue, that's the next financial year, revenue and PAT estimate by around 23% and 10% respectively. Also, we have report coming in, a couple of them, because Kirat Parekh recommendation on city gas distribution companies has finally been implemented. Of course, this was much in line with expectation, was supposed to happen a little earlier. Nevertheless, that has come through right now. It's a great positive coming in for all the gas companies, because the cost of production for these companies now with this implementation comes down and they render to be more competitive with other fuels. Now, new gas price formulas have been announced, and as per the recommendation that City has also come in, actually there is led into a 24% cut in the domestic gas prices. And despite the price cuts which are made by IGL and MGL, calculation, at least the City report and the Jeffries report, they're suggesting that this means attractive spot unit EBITDA for these companies, rightly on back of the lower cost of production, which is expected on account of this. An interesting one by Goldman Sachs, there's a report which is coming on auto. Two of them instead, where A, it's upgraded Tata Motors to buy rating, and B, it's downgraded Maruti Suzuki to the neutral rating. Now, why it's upgraded Tata Motors? It's also put the target price of around 550. At the present levels, the stock is trading at around 437 odd rupees. This is to factor in an improving volume outlook from JLR. Of course, there is the JLR update also which has come through, which I'm going to be addressing in jiffy. But there is a downgrade report which has come in for Maruti Suzuki to neutral rating. The target price has been cut to 8,800 from the levels of around 11,000 which was witnessed or which was being recommended earlier. This is to factor in the persistence of the weak demand, which is especially coming in for the small car segment. So you can actually see two contrasting data coming in for auto space, and both of them are top big names, right? When it comes to the Tata Motors JLR update, as per what has been reported, it's registered a 30% year-on-year growth in retail sales for the quarter ended March. Also, there is a report which is, there is also Q4 updates. Expect Q4 updates to come in, especially because it's just about to, kickstart the earnings season, right? And Titan is no exception. It's come out with that update, fairly decent update out there, decent amount of growth that the company has recorded. It's almost a healthy double-digit growth when it comes to all of its key businesses. The revenue also, they're growing by 25%, aided by a higher growth contribution from the watches segments, wearables, and the emerging business. Now, what Citi has to say about this is Overall, they look at the Q4 updates as an impressive number, which is despite relatively weak March store expansion. So do keep that in mind. And of course, it also comes at a feeble base, right? So do keep an eye out on Titan also. The growth for all the other segment, according to Citi, for Titan has been very impressive. And right now, they've recommended a 24% growth on top line is what they have actually registered and clocked as per the filings. So do keep an eye out also on bunch of these names that I've just suggested right now. So City Gas Distribution Company, Auto, Godrej Properties. These are the ones that are expected to be in limelight in today's session. But Prashant, I'm going to come back to you and ask you about what do you make out? How does the technical chart right now look like something like an IGL, MGL for that matter? Any city gas distributor right now, does that look attractive? It's a valuable trade right now?
So, Nickey, IGL, I think, made a statement on Thursday itself when it tested the breakout zone and made a low, which was somewhere around the zone of 445, which happens to be a major support. And from there, if you see, it closed at 460 plus with a very strong volume. I think the volume is popping out of the chart and it has been the highest volume in the past quarter. So according to me, it definitely goes in a buy list. Any dip on this stock should be a strong buy. And the stop loss positionally has to be just below 450. So you can keep it around 448, 449 and buy every dip. You can look at targets around 485, 490 for sure.
All right, that's the word coming in for IGL at least. And also we've spoken enough and more about overall the metal and the three bets that Prashant has suggested. But we're going to wait on the sidelines to see how does the market actually kickstart the earning heavy week. This week actually marks the start of earnings. Something like a TCS, Infosys, all of these companies are expected to report the numbers towards the fag end of the week, but expect some volatility to play out, ahead of this earning report which comes in. So let's look at the market. It is somewhat a flattish to a positive start, a mild start, but with 0.2% of a gains out there, 17,600 mark. That has been held on to. Bank Nifty, 2/10, if you talk about Bank Nifty, we're yet to see how does that chart stack up for you. And 0.1% of gains coming in for Bank Nifty overall, 41,000 level what has been held on to. And if you look at the other top performers, sectoral indices out there, just to see the flavor of the market and also the market breadth momentum at this point of time, we're looking at advances and declines. Yet to be seen, needs to be updated, but Nifty Metal Index, 0.2% of gains out there. So there is a positive momentum coming in for metal, just like Prashant indicated, his top bet was Hindalco. Nifty IT, at this point of time, flat with negative bias. If you talk about the other sectoral indices, something like an auto name for that matter, we did highlight about Tata Motors and Maruti Suzuki, right? There's an upgrade coming in for Tata Motors. Nifty Auto at this point of time, 0.75% of a gain coming in overall for the auto basket out there. And if you talk about the FMCG basket, it is with it is flat right now, but with positive bias overall for the basket. Pharma name, 0.2% of gains coming in for the pharma sector overall. And if we talk about the other sectoral indices, something like a infra or reality for that matter, we're seeing some amount of gains coming in even for infra overall. 0.5% marked out there. In terms of reality, Godrej Property, there was an upgrade report coming in by Motilal Oswal. Nifty Realty at this point of time is shining bright. More than 1% gains out there on that one. And energy too, 3.4% of gains coming in for that one. But if you talk about the advance and declines at this point of time, of course, the market breadth is skewed in the favor of advances. 38 advances as compared to 12 declines. If you talk about the top gainers and the top losers on the Nifty, just to see how that has stacked up, to see Tata Motors is featuring in that list. There we have it. Tata Motors is the top gainer out there. Adani Enterprises, Titan, impressive Q4 updates out there and is one of the top gainers out there. L&T and Bajaj Finserv, ONGC also is featuring amongst the top gainers in today's trade. If you talk about the losers out there, just to see where are we stacking up in terms of the losers, we're seeing something like an Asian Paints, Maruti Suzuki, which was downgraded and IndusInd Bank. These are some of the top losers that we have on our list. Britannia, Tata Consumer Products and Kotak Mahindra Bank. These are some of the other top losers that we have overall. So you can see the contrast in the auto names, right? At one place you have Maruti Suzuki, which is one of the top losers, and in one place you have Tata Motors, which has been upgraded as one of the top gainers. So clearly contrast picture out there. But Prashant, coming on this one, what do you make out of Tata Motors and Maruti Suzuki? There is this, the report which is coming, which suggested that, there's an upgrade which is coming for Tata Motors. How are the charts right now? Are they attractive enough for a buy at this level?
So, Nickey, I had just done the analysis for Tata Motors in the morning, and I saw that on a weekly basis, 455 happens to be a major level in spot. So, my suggestion would be to not run after this emotional gap up, wait for the stock to pull down and observe for the week, because we are just above that crucial level. But if we close above that zone, that if we close above 455 on a weekly basis, then next week definitely goes in the buy list. My stop loss would be 440 positionally. And then I would hold for targets around 490, 500. For now, I think I would wait for a dip to that zone. We should be around 450, 455, and then plan a trade. But avoid this emotional gap up. Wait for the stock to cool down. And as far as Maruti is concerned, I think 8,500 has been a major resistance. Even today, as of now, it's working. So my suggestion would be, if anyone is long on the stock, we need to keep a very strict and hard stop loss in the system at 8,390. If it breaks that level, my suggestion would be to come out of longs and wait for some time.
All right, so that's the word coming in on both Maruti Suzuki as well as Tata Motors. But Prashant, we are going to leave it at that. Thank you so much for taking out the time this morning and speaking to us as always.
Thanks a lot.
All right, it's that part of the day where we address the fundamental side of the story. Of course, in this week, it's going to be kickstarting the Q4 earnings season week. And for this, we've been joined by Dipin, Mehta, the director, Elixir Equities, with us. Good morning there, Dipin. What do you make out of the markets right now? And in specific, I want to chat about the city gas distribution companies, because finally that, Kirat Parekh recommendations have been finally implemented. What do you make out of it? And do you expect further amount of, how were the valuations stacking up for these players to you?
Good morning, and thank you for having me on your show.
Pleasure.
It's a pleasure. First, about the market, I think that last few trading sessions have been very encouraging. And if you're able to build on these gains, then that'd be great for the market, because on a technical basis, although I don't follow technical so much, I think it is at a critical point. And any further declines from here would certainly damage the medium-term prospects on a technical basis. On a fundamental basis, for the time being, I think we are seeing positive FII flows. And on the whole, I think the upcoming earnings season, a lot of investors are, I would say, generally cautiously optimistic, because there are many challenges that have been there in the quarter which has gone by, but there are many positives also that one can take out of it. So I think we just need to wait and watch, let a few trading sessions go, see how we're getting into the earnings season, and then maybe take a call on the medium-term prospects of the market. Coming specifically to the city gas distribution companies, on the whole, we are not very positive on the sector. The reason for that is that, just as we have seen the case with oil marketing companies, the entire trend is going more and more towards electrification. And eventually you will have city gas also being impacted in terms of longer term volume growth rates as more and more EVs come into play over there. And although the near term earnings will remain strong, the effect of the EV disruption will impact the long term PE multiples of these companies. And recent Kirat Parekh recommendation, I think, is slightly negative for these companies because of the price caps which have been kept over there. So on the whole, I would say that within the entire market space, there are many other interesting opportunities rather than city gas distribution. So investors could look at those segments like banks, infrastructure, select consumption-oriented stocks, and there are even some contrarian plays in software.
All right, that's the word coming in on the city gas distribution companies. Not exactly a positive development per se, but what Jefferies has to typically talk about it is they've actually maintained that IGL as a top pick and also maintained a whole rating coming on that one. I've, in fact, gone ahead and upgraded these counters. So that's a bit of a different view coming on of that one. But I'm going to chat about the IT sector overall with you. What are you making? What are your expectations on that one? Accenture has reported in numbers already. Do you think there is more in terms of the valuation catch-up that the large caps can now do? Enough of beating that has come through? How do you look at it, the space overall right now?
See, I think looking at Accenture numbers and whatever commentary is coming through, it's not as bad as we earlier feared. I think companies which have been very aggressive when it comes to marketing, going after big deals like say Infosys or Coforge, I think for them the growth rates will be marginally impacted. And there are some players, who may be underperforming significantly as compared to their peer group. So within the IT space, I would say that you cannot paint all of them with one stroke. This particular earnings season and the next 2, 3 are going to separate the boys from the men. And really the companies which are focused on specific verticals or specific service offerings, I think those are the ones who will be able to sustain growth rates. Whereas the ones engaged in legacy businesses or have been a bit weak as when it comes to marketing or going after larger deals, their performance may be impacted. Having said that, I think companies like Infosys should report exceptional numbers, and even the guidance will be more or less in line with what Street is expecting. On the whole, we should see the industry improve on its operating profit margin, which is positive. And within the mid-cap space, I think companies like KPIT, Tata Elixir, they continue to deliver because of a very niche offering within the auto segment, where the IT spendings remain quite robust. And then there are companies like Coforge. I would be very positive on LTI Mindtree as well. And also to an extent, companies like Emphasis, which I think have been quite well placed in terms of their offerings, their marketing strategies, and the kind of order book position that they are sitting on.
All right, so Coforge, LTI, Mindtree, and Emphasis are some of the names that Mr. Mehta is suggesting right now, at least good numbers that they're expecting coming out of in this quarter. But overall, your assessment right now on something like banking space right now, what are you making out of it? There were enough more fears when it came to the whole crisis scenario, part of it, US banking crisis scenario, which took place. Do you think any of that is now it's thing of a past, and the numbers that are expected to be reported in Q4 will be healthy set of numbers like the trend which has been catching up at least for the last 3-4 quarters? Or how do you look at that space, and how are the valuations right now for the banking names?
See, first of all, the US banking crisis has got absolutely no impact on our banks. In fact, it is a bit positive because I have heard money flowing into some of the banks which have got branches in the gift city. So it's, I think, in no way impacts our banking sector, which is, I think, in decades I have not seen this kind of healthy balance sheets and these kinds of financials for the sector as a whole. Now, the biggest emerging challenge for the banks is the resource crunch, which may come because of the kind of tight liquidity conditions and the kind of fight, I would say, which is there for deposits. So I think that lending is easy for the banks at this point of time. The NPA cycle hasn't turned, so your cost of credit is restricted. But the real issue and the challenge is in terms of raising deposits, whether it is for the NBFC or even the banks per se. And given that assumption, I think the strategy should be to go for good quality banks and NBFCs, which have an edge when it comes to raising resources, like a HDFC Bank or a Kotak, Axis, ICICI. I would prefer these companies, and over there, HDFC Bank in particular, because they've been focusing very heavily on raising the deposits, maintaining their CASA ratio. And if they have such low cost deposits in a rising interest rate scenario, that would be very advantageous for the net interest margins. Within the NBFC space, companies like Bajaj Finance, which are extremely well placed in terms of raising deposits. And mind, if you look at the quarterly numbers, the main number they highlighted the kind of deposits which they have raised. I think those are the ones that one needs to focus on. And I would like to go with the larger banks and the larger NBFCs, because at some point of time, I think the net interest margin of the industry as a whole will come under pressure. And companies which have got a good brand and have a good, kind of a resource generating system in place, they will be the key winners over here. Coming to valuations, I think valuations are very attractive. Next 2-3 years in terms of growth rates, I think there are no real concerns. NPAs also are well within control. And a lot of the large finance consuming sectors, be it auto, be it real estate, infrastructure, they're doing very well. So that augurs very well from the demand perspective as well.
All right. Also, let's chat about the real estate names right now, because the little data points suggest that the house affordability is the best that we have in many years, right? But that still runs into the reality of high interest rates. How do you view that basket overall? We have seen that upgrade coming in on Godrej Properties today, where that comes in after a sharp correction from the month of Jan, right? Do the valuations look attractive now?
See, with real estate, one needs to be selective, and we're very positive on the sector on a medium to long-term basis. But I think last few quarters have been very good for real estate sector. So you could expect a mild cyclical downswing. I think that has to be accounted for. That next 2-3 quarters may be a bit challenging for the sector as a whole, including Godrej Properties and Macrotech and DLF. First of all, the base effects will come into play. Secondly, I think because of COVID and the way the tax rules have changed, as also some of the other regulatory implications, because of all of these, a lot of the real estate sales have been preponed into this financial year. And therefore, one should build in a slight lull from April onwards or so, at least for a few months or so. And with the interest rate scenario being a bit uncertain, you could expect a mild impact on the demand as well. And maybe you could see some correction over the next few months in the real estate stocks, but those could be great entry opportunities. I think the sector as a whole is in a super, I would say, 8-10 year upswing. And once interest rates start to stabilize and maybe perhaps even start to drift lower, you will feel the demand again picking up over there. At the end of the day, I think there is a lot of requirement for good quality construction, especially in the affordability sector. And now commercial space also is picking up pretty well for a lot of the real estate companies. Hospitality, I think after a long time, that is one segment also which is opening up for real estate companies. And there are a few companies which have got a lot of properties as well. So I would say in summary, medium to long-term prospects for real estate are exceptionally good. But in the short term, next 1 or 2 quarters, don't have very high expectations in terms of financials from any of the real estate companies.
All right, no expectations coming on that one. But overall for Q4, which are the pockets or the sectors, Mr. Mehta, that you think would really outperform or surprise the markets? If not for IT and if not for banking, which are the names that you think could be a bit of a surprise coming in for the street?
Entire engineering and construction space. Stocks like L&T, ITD Cementation, NCC, I think all of these companies which are engaged in building infrastructure or which are engaged in the capital goods space, you could add ABB, Siemens, Thermax. All of these companies, I think, are going to report exceptional numbers for the March quarter. Typically, Jan, Feb, March is very great for these capital goods engineering construction companies because a lot of the projects, their clients would like them to finish by March. The budgets they would like to get used up by March. And the order flow also is very strong because March is a very important deadline for many government as well as semi-government agencies. So I would, if there is one sector you want to have a pre-earning season bet on, and now we say short-term, medium-term, long-term on all time frames, then that's the capital goods sector. And usual disclosure that we and our clients are invested, top pick has to be L&T. You have been seeing the kind of order flows that keep on coming in. Unfortunately, the management doesn't disclose the size of the orders anymore, and the total order wins are only at the time of the con call or the earnings release. But I suspect that this quarter may be the best ever for L&T. And I know the stock has been outperforming, but still has a long way to go in terms of what the dynamics are playing out within the industry. So that is one sector that one should be having a very close eye on, and it could be the real winner in this earnings season.
All right, so do keep an eye out on L&T. Probably more steam left in for this stock. At least that's the word coming in from Mr. Mehta. Thank you so much for joining us and taking the time to speak to us this morning. All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us for the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.